The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft, chartsupial, David White. And we got a little bit of action out here. Kind of interesting for a Friday. Didn't see a lot of volume in the first move up. About the first 10 points up in the S&P. Ran a few of the stops out here. I think some people put in. And we'll see what happens out here. But let's take a quick look at the market as we speak. And that is up 18 points on the S&P cash, 1.75 billion shares. So what we were doing about 2.1, I think, yesterday. So not a lot of volume and not uncommon on a Friday. Looks to me like a lot of people wanted to get out of the way. There was some discussion that things are looking better in the Ukraine before they will look worse again. But I digress. And of course, on this day in 1974, President Richard Nixon announces his intention to become the first president in American history to resign, with impeachment proceedings underway against him from his involvement in the Watergate affair. Nixon was finally bowing to pressure from the public and Congress to leave the White House by taking this action. He said, a solemn address from the Oval Office, "I hope that I will have hastened the start of the process of healing, which is so desperately needed in America." What a dark time. Dark, dark time. Divided country on the heels of Vietnam. Boy, doesn't this... there's so many parallels right now in history to where we're sitting today. But I digress. Again, markets don't culminate in one grand glaze of glory. And, of course, we're getting a little bit of what I think is market gas on a Friday. And maybe we'll let it out one way or the other, if you get my drift, as we look at this market. But I think we're still seeing this downturn violently opposed. And that's pretty good. When it becomes accepted as self-evident, it will be time to cover my shorts. So, what else do we have going on? It is a mad market out here. And one of the things that I was thinking of today on the way in was a lot of people who listen to the show for a long time know that I spent the first 10 years of my life in Hawaii. And I think there was one time when we actually had some bad weather. And I'm not exactly sure when it was. Maybe around my birthday, maybe around my brother's birthday, just vaguely. 6 years old, you don't remember much other than really bad weather. And the one thing I do remember is, of course, we lived on Hickam Air Force Base. And in the base housing there, if I looked out across the fence when we lived on the base, I think it was the first 8 years. The last 2 years we lived off base. But the first 8 years, if we did have any really bad storms or anything, it would shake the ships that were still sunk from World War II in the bay, like the Arizona, and we would hear distant rumbling that was very much like thunder, but it was not, there wouldn't be any lightning in the sky, and it was still those shells down in those ships still going off after all that time. And if you go there now, of course, they cut the superstructure off, and I famously got in trouble when I was 6 or 7 years old because my brother talked us into climbing under the fence and going and playing on the superstructure of the Arizona. We didn't know it was a memorial. We just thought it was a neat thing with lots and lots of places to get cut and get tetanus. And, of course, those are like a magnet to a young boy. And we finally got our rear ends tanned. It'd be, we'd probably be called child abuse these days. But I think it gave us the message, although, of course, we were probably too stupid then to even know about it. Anyway, we do have an interesting market moving here fairly quickly, and we'll keep a close eye on it. Looks to me like a lot of people were ready to bug out a little bit early, and maybe they started covering shorts here into next week, which is expiration. Of course, it is a tough thing to be short expiration week. It is normally a bullish bias, but I think the news giveth and the news taketh away. And what we know today is that we've had a 17-point move, and so far 1.7 billion shares on the New York Consolidated Tape, and that's wimpy, wimpy, wimpy. Not hefty, hefty, hefty. Wimpy, wimpy, wimpy. I'm going to get into some stocks fairly quickly here. I need to load them up. And, we're still there. We'll go through a few of them. Just wanted to see mostly what moved on earnings yesterday. Air Lease Corporation, nice little pop-up, but again, not a lot of volume out here. And a little disconcerting for me in that we see a nice pop like that. If we go back and look at a little longer run on this, you've got a high volume low out here that came close to being tested. Did it? 33.92 to, I guess it did. You got a test on just about 500,000 shares lighter. The April 28th low out here, 1.2 million shares, came into it with 710,000 shares on August 1st, and a nice rally up off of that. In fact, this chart doesn't, the more I look at it, the chart looks better out here. Symbol is AL, and what I'm really looking at is the relationship between the April 28th low and this low of April 1st out here in a lighter volume. But also, you had strong volume up from that April 28th low to the June 6th high at $42.89. And you had kind of a steep, huge sell-off on the 12th of June. And it's been kind of rolling around down here since then. But you got back into this low that was fine. And now you're popping up. But I think the reason we're probably seeing that light volume is that we are back into that heavy down day of the 12th. And that day had, 4.6 million shares. So it's going to be tough to get back above that $39 level. So there may be just a little bit more in this one. Of course, all these, I think, were earnings plays from last night. Little pop-up here from Global Eagle Entertainment, ENT. Another one out here. This thing's been bouncing along this level of about $9.75. Another pop-up here, but not a lot of volume. And you'd think with a nice 28-point run in the S&P cash, we would see something. Or is it, what was it? Oh, 16-point run, excuse me. I thought I heard somebody on the radio say 28 up, S&P up 28 points on my way over here. Anyway, we've got Gastar Exploration Company, GST. This one had a nice pop. Really still looked like it wanted to go back down to this $5 level. But it did a good test back here on March 14th. Had a test of the March 14th low with 3.3 million shares, tested it with 1.1 million shares. It had its nice run up to 910, back down, and still no volume out here today, which has got to be, some of these winners got to have some volume. We'll find it in a minute here. Lionsgate Entertainment, of course, the movie company, popping up here to, needs about 1 million shares, 2.3 million shares. So maybe this one looks a little nicer. I see it's going back in to this March 12th high with 3.8 million shares, $33.59. Needs another $1.59, right? No, actually 90 cents. So getting fairly close out here. So we'll keep an eye on that. But that one's going to need some, 3.8 million shares, 2.2. So let's say this thing ends up with 2.8 million shares on the day. That's probably going to get back up there. It's going to be close. But some of these movie companies, rather suspect. Monster Energy, a nice kind of flying doji out here today. I think they call them dragonflies. It does have volume, got up to $71.20, and what a low of 68.49. So quite a price range out here. Decent volume, but of course it is lower than where it opened today. Monster Beverage, of course, in a constant war with people saying and questioning the health of a huge dose of sugar and massive amounts of caffeine. Of course, I hearken back. You don't get to hearken very much. I get to hearken back to the days of my youth, misspent youth, drinking lots of Jolt Cola and staying up and programming for hours on end. NVIDIA, nice little pop. This company's on the road to like nowhere. It doesn't have a dance partner. It needs to be bought out by somebody in the processor business. Now with all the companies basically integrating processors, or integrating graphics processors in the main CPU of their chips, it becomes more problematic for them to live by themselves. A lot of volume down on this last leg from 1960 on July 16th back down to this $17.34 low on June 7th. It did test the May 9th low, though, on lighter volume, 13 million shares to 10 million shares. So a lot of these charts are starting to really give decent signals, and the signals are starting to work fairly decently. Spectrum Pharmaceuticals, SPPI, I can see why this thing popped yesterday. Kind of a reversal day yesterday to a reversal day today. Looks to me like it's going to try to work its way back up into this gap from the 10th of July, where it gapped down on 1.3 million shares. You got 1.1 yesterday, you've got 1.1 today, and 1 million yesterday. It looks like it could get back up in about $8.20. Yesterday I said if there was one stock I liked after earnings, it was this Ubiquiti Networks. These guys make little devices you plug directly into your Ethernet connector, and it gives you a basically an access spot. Use these, and well, these guys selling a lot of it to warehouses so people can use handheld devices, that kind of stuff. I missed this one because it was a disinformation campaign when this company, slightly after this company went public, and it scared me away from it because you never know when those things are true or not. But they were able to tamp down the price of the stock for a great deal of time, saying that the CEO was in the mob, Chinese mob, all that stuff. I'd used their products for 5 years before this company went public. And when it came out, I said how much I loved their products. The stock, another issue, but nice volume, nice pop-up. Anyway, we're going to get to the losers in the next segment. We did the winners in this one. We'll do the losers next one. Give me a call, 877-927-6648. And yes, I can look at Musa, M-U-S-A, when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we had a question in the den about MUSA, which is Murphy USA. I assume this is the same Murphy that I know, which is the kind of a discount oil company, small convenience stores across the United States. Now, let's make sure. Take a look here. Yeah, retail stations company for motor fuel products and convenience merchandise. So anyway, looking at this, I guess the question is what's going on with it. Well, you had a nice pullback off this June 9th high down to the July 15th low. And in that, you had okay energy. But what you really want to look at is that you had this big move up from May 6th to June 9th. And you had a great deal of energy. This is kind of a lackluster pullback. What you should now see, though, is energy on the way up. And it's about 30% off of that move down from $52.73. So this thing's really starting to get, probably get a little heavy out here. I would say most likely you had volume, but it came down yesterday, so you get the test of tomorrow. You need this thing to really break above 52.73 and see if volume comes in. If it doesn't, it looks to me like this thing would be in a trading range from that 52.73 down to 47.29. But this thing's probably going to tag 52.73 again, and you're going to get your answer. Yes, gas stations. Eat here, get gas, as the old sign used to say. How many people know that Route 66 sign? Eat here and get gas. The poets, and they don't know it. When we go on to the losers, Capstone Turbine it's dropped the Baby Ruth in the punch bowl today. Bigger volume, not as big as some of these down days, but certainly broken its last support line, which is the May 9th low, $1.28, 11 million shares. Kind of tugged with it back here on the 17th and 18th with lighter volume. Even today's 10 million shares. Looks like it's going to break that, though, by the end of the day. So I don't know if there's anything even back here any further for this alternative energy company. They make, let's make sure, but pretty sure that these guys make make turbines and gas generation units. And for a while, these guys were, it was a big deal. And they had run up, if I go back, way back to the left, this was one of those high flyers. Okay, $1.07, we've got 15 million shares from September 6th of 2013. And I'm going to say that that's the next run out here. If that breaks, you're back down in the 70s. Okay. Yeah, it's a penny stock, but interesting nonetheless. Computer Sciences out last night. Of course, hammered down, big volume, 2 million shares today. It's going back into this line of support, which is fairly decent support, actually. Had a big sign of strength on the 31st of January. 6 million shares, that thing rocketed up. You had the wide candle, you had the wide price spread, you had, basically you had it all. We need to play that song now. What's that gal's name? We could have had it all. Anyway, it is what it is. Computer Sciences, though, down. Volume has picked up a little bit, but should find fairly decent support at this $56 level, about halfway into that gap from the 31st of January. What's her name? I'll think of it here. Maybe somebody said in the Dan. You could have had it all. Da-da-da-da. She had the Emmy-winning album last year. What's her name? Yeah, I'll think of it in a minute. Adelaide, yeah. Good song. Could have had it all, and they could have had it all, and they didn't have it all. Breaking lows out here, and major lows. Hanger Incorporated, HGR, this thing's down, and getting beat like a redheaded stepchild. Let's look back a little bit farther on this one here, see if there's anything else out here. I blew through it. I mean, you basically had 440,000 shares on November 16th of 2012. It's blown through that today with 4.5 million shares. That opens up the next major lows out here. And where we go back to that, that'd be $14.57. We'll talk more about Hanger Incorporated and some of the other dogs today as we look at the rest of this market. Be back in just a minute. Give me a call, 877-927-6648.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
As we come back, we were looking at a hanger, and boy, did they miss. Looking for 40 cents a share, actually had 40 cents a share, 53 cents was what they were looking for, 13 cents short, and missing huge. Moving expectations down of $1.60, $1.70, and billion to 108 billion. But boy, I tell you what, it's broke hard, and you've got to look at the $15, $16 range coming probably fairly soon. Today looks like an exhaustion move, so this thing could move sideways. But of course, they're in the whole artificial knees and all that kind of stuff. Orthopedics, as they like to say. So we'll take a look at that and look at a few other stocks out here. We've got Post, P-O-S-T, Post Holdings, and another one down here, kind of blowing chunks, as they say. Take a quick look at this. Manufacturers, markets, and distributors ready to eat cereals, snacks, and active nutrition products. Post Holdings. Is that the same Post cereal? That's got to be it, right? Who knows? Organic, primarily mass merchants. Yeah, that's it. Grape nuts, postage, all that stuff. So yeah, what can you say? We're getting to that. Somebody in the den asking about Solar City. We're going to look at that here in a few minutes in the losers section. But post down on heavy volume out here, crossing that $35 lane. The last major low in that range was at $38 on October 8th, which opens up $28.35, $27.33 back in May of 2012. So blowing apart a lot of these stocks, even on a day when we're up significantly. Rubicon Technology, another one out here. This one's blowing through, or at least getting ready to blow through the lows. Last major low out here is February 21st of 2013. So what, a year and 4 months, year and 5 months, something like that? Year and 6 months? Yeah, year and 6 months. 1 million shares that day. We've already got 2.7 million shares today. So it's got, what, another 70 cents down to tag that. But it looks like it's not going to have any problem with the energy we have out here. Let's look any longer. Yeah. Yeah, that's probably it. Got this untested low out here from February 21st, 2013, and that's where that thing is probably headed. Solar City, boy, did they move this one after hours last night. I think it was up even higher. Had a nice spike out here today. Tried to drive it higher. This one's one of the stocks that I warned about trading because it's got such high short interest. They apparently ran the shorts in the morning, ran the longs in the afternoon, but this thing is down. And it was earnings. And, in fact, let's get the headlines out here on this thing. I've got a real problem, of course, with the business that they're in, and that without government subsidies, they would be out of business. And, of course, next year with probably a likelihood of 80% of a change in the Senate right now, you have to think that it's going to be almost impossible to get those subsidies renewed. They expire in 2017. And I think you can make a fairly decent case that that probably will not happen, whether you want them to or not. And I won't debate the pros and cons of it other than the reality of it, which is I don't think they're going to be renewed, which means these companies have about 2 years to become profitable. They would lose massive amounts of money and be out of business in the blink of an eye without them. Solar City, of course, puts solar panels on people's roofs. It is economical because of the subsidies. Not only that, but you sell the power back to the electric company. That power is at about almost 2 times what it costs the power company to make it out of coal or natural gas. So there's a few ways that basically this is working at the moment. And the thought, of course, always from government is if we give the subsidies, then they'll come along and the prices will drop. Now, the prices have dropped. It used to be 4 times as much. And, you know, that's about twice as expensive. The problem is, and the debate centers around a great article in The Economist from last month. And it said it's not the cost per kilowatt when the sun's out, it's when it's not out. When making these things 3 times as expensive when you really think about it. If you built a power station for natural gas, you can run that 24 hours a day and still get the same amount of power out of it. What you can't get, of course, is that power when the wind's not blowing, if it's a wind turbine, or if the sun's not out, and or if it's in the middle of the winter. Making these things basically 4 to 8 times less attractive when you really look at it. Yes, can these things put out power that's only twice as expensive as the local person, but that's only 8 hours a day. And you're paying for those solar panels 24 hours a day. And a very interesting article and argument in The Economist on why solar is so rapidly expensive. And I hadn't really thought about it that way, but that's it. Not only do you pay for the solar panels, but you've got to pay for another power plant that can produce just the same amount of energy at night and during the day. So it's basically redundant. Maybe you may be burning a little less fossil fuels during the day when these things do work, but probably 12 to 14 hours a day, not doing you much good. But I digress, and we look at this. Picked up a little bit of volume. You're still inside. You're probably not going to get a real clear signal on this unless it bust, 65 on the downside. And again, this is like a 30% short interest stock perpetually. I would love to short this area, but it is tough. If you wanted to look at a play in this, I think a better play, both short and long, would be looking at TAN. And this has some fairly decent volume. I think all these solar stocks are probably, when you look at the solar energy index, probably coming around in that low $37 range. And at that point, you're going to see whether or not the volume dries up or not. If it does, maybe you would have a play out there for solar. Zynga, lower today, but I kind of like this stock. We're going to be talking about it fairly extensively. It has gone into the huge volume down day of June 5th that had 150 million shares with 66 million shares today, and making a little hammer candle out there. If I was very bullish on the market, I probably would buy it now. But I think we have an opportunity to buy this thing even less expensive. What I dislike is that you had a nice pop off of 273 and up to 329, but the energy actually down on this last leg was too much. Even if we've tested the low on lighter volume, I wanted the energy on to the downside lower. Maybe the volume comes in this thing, but I have a feeling you're going to get a chance to buy that even lower. If you love it here at 270, you're probably going to love it at 220. If you love it, why don't you marry it? Anyway, that's what I tell Andy all the time. He says he loves different things. I love gold. I said, well, if you love it so much, why don't you marry it? Pee Wee Herman. He was such a Nobel laureate, wasn't he? Anyway, I wanted to go back here and look at some other stuff. Maybe I can find it in all my stuff. Here it is. BID, B-I-D. Don't think we've looked at that yet. And again, you can give me a call at 877-927-6648. Interestingly enough, Southerly's BID. Now, this thing is breaking through the lows, and of course, we've got nice volume out here. Let's go back. We're going to have to take this back to find out where the next level down is on this thing. And it's going to be down at about $33.5, $34 level. And it looks like you're going to get there in a hurry. Let's see if we... yeah, that's pretty much it. Yeah, maybe down $32.95 on April 18th of 2013. 1 million shares. So you wouldn't even need a lot of volume down there to break it, and you are there in a hurry. Let's look at the headlines on old Sotheby's here. Third point, low proxy fight costs Sotheby's $24 million. Expect a bargain. Sotheby's shares sink. Salaries boost. Who? Oh, they're paying themselves way too much. That's what's weighing on their earnings, is they're turning all that cash back into bonuses for the executive branch. At least that's what I see in the news here today. Well, that says you're headed back to this $32 level. And there's a little gap out here, too. I don't make much of it on May 3rd of 2013. Not a lot of volume in it, so I'm going to discount that. But I think, yeah, you've got that $33 level that's going to come in from May 18th of 2013, and it looks like it's going to come in there fairly quickly. Okay, let's see what else we have out here. Someone's posted something here. Someone posted all the stuff about the Economist article, which I recommend that you read if you believe in solar energy or wind power, and the actual costs to consumers. Let's see if anything else is going on out here. Let's take a quick look at I should have my... There it is. Take a quick look at what we've got going on. Okay, 1927, 1.95 billion shares. So, again, a nice little pop out of here, but not much volume. So we'll have to see what next week brings us now. Light volume pop. They try to keep this thing up and around 1920 for expiration next week. Time will tell. I have a feeling that we're going to get more bad news next week, actually. I think this is rather probably a short-lived opportunity to get out if you bought one of these dips. If we would have seen some volume come in today, maybe I would feel a little different. But nice 18 point pop, and add a little bit of hope to those people that were long. What else do we have going on out here? I wanted to see if there was anything else I wanted to be looking at. We got about 3 minutes. So what are we doing here? Let's see if there was anything else. Dollar index. Take a quick look. What do we got? It's off 14 cents. No big deal so far. When we look at the crude contract, up 22 cents for West Texas. Platinum off $3. Silver off 7.5 cents. Gold off $2. And it's that DAX. I guess the DAX came back a little bit. I saw that. I thought much lower. See if there's anything else out here. Oh, want to look at Apple. AAPL. Before this, and let's get just a little closer to this, and let's go to displaced moving average and the 25 by 5, and let's show that actually, and yeah, still below it. One of the things we're going to talk about, oh, by the way, I'll be in the 4 o'clock hour with Tom O'Brien. We're going to do something special today, and that is we're going to go through the top 9 holdings of the NASDAQ 100. And why is that important? The top 9 stocks in the NASDAQ account for 50% of the entire NASDAQ. So 10% is over half of the movement in it. And we're going to talk about overall the futures of those 9 stocks since they're going to define what the NASDAQ does in the near-time future. Anyway, one of the things I pointed out in the Tech Insider today was one of the things I like to use for long terms and in my models is a thing called a displaced moving average. That displaced moving average is a 25-day average moved 5 days into the future. And it gives you a nice trend line out here. Overall, I can scan the entire market and see how many stocks are going above and below that. It's a fairly decent indicator. I don't tend to like moving averages much. I do like this as an opportunity to give at least a read as to stocks and long-term trends. Apple has now gone below it, and it is still below that trend. Let's zoom in here just a little bit more so you can see. One of the things that the displaced moving average does is fix a problem with moving averages. That is that they're always 90 degrees out of phase. That means they're going to be right 50% of the time. And that's not just me talking, that's good math and science. If you're 90 degrees out of phase of a signal, you're always going to be basically right and wrong alternately every 90 degrees as it goes through an entire cycle. Anyway, as long as we see this thing stay pretty much below $96, Apple is under some pressure. We're probably going to talk about that in the Tech Insider Hour with Tom O'Brien. Like I said, all top 9 stocks in the NASDAQ. We're going to go through them. Probably not going to talk about too many articles, but broad brush on the big tech. We'll be back in a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back, we just got a few minutes to wrap up the day, don't we? Well, do a little housekeeping, I guess. I'm going to take a quick look at this market, see what we've got here for the last few minutes. Any change? Now, let me update this just to make sure that I'm not looking at old data. No, it just hasn't moved. I thought the market was broke. Anyway, 18 points on the S&P cash, 1.99 billion shares. It did take up. We got 100,000 shares, so it did move in the last 5 minutes, but not much. So it'll be interesting to see what happens next week after this light volume bounce. But my guess is that we see 1900 before the week is out next week. And at least we're close enough to it that I think nice round numbers, people are going to look at that 1900 on the S&P cash. See if there was anything else out here that caught my eye before we go into the weekend. Share repurchases. AAL. This one didn't have a big move, but let's take a look at it. Reported July traffic down. And you can kind of start to see, I've got this 25 by 5 up here. Pretty much went short when I started seeing the majority of the stocks underneath it. Pretty much the same signal was generated by the summation index McClellan Summation Index, but they're pretty much down. But you're going to get, in any kind of down market, you're going to get pops. And I think that's what we've got today. Looking at the shares of the stocks I have, I think we're still doing okay out here. We'll have to see how this market closes. And of course, nothing more important than the last 30 minutes of the day. Of course, Tom O'Brien's going to be able to give you that call in the next hour from where I sit, actually, that I'm in studio today. American Airlines actually not looking too bad out here. Could have been worse. Looks to me like the previous low out here, 31.86 from April 15th, could get tested on lighter volume. Yeah, it's kind of a decent volume day on July 8th, but it really didn't go anywhere. And, of course, you've got fairly decent volume up here close back to the top. Kind of a tough one to figure out there. Of course, old number S out here still having its troubles. Not getting any gooder. Sprint, of course, tough to see how this thing gets any better. We talked about this thing failing and coming back to this gap. Well, it's almost here. That gap had huge volume on the 11th of October 2012. What is it? 516 million shares? Could that be right? Probably is. Anyway, you got that monster volume out there. You also have monster volume at $5.61. Is that right? Yeah, I guess it is. It must have been. I'm going to have to go back and look at that to find what kind of day that was. Anyway, you're coming back to these gap ups that should act as support. So you don't have much further to go out here. You've got, 20 cents, 29 cents for Sprint, which would be interesting if it comes out here and starts bouncing around, get a consolidation for 2-4 weeks or something at about $5.50, maybe even down to $5. That could be very interesting. Anyway, catch me on the Tom O'Brien Show tonight, somewhere around 20 after the hour. We're going to start talking about the top 9 NASDAQ stocks that make up over 50% of the NASDAQ. And Tom's going to give you his opinion. I'm going to give you kind of a fundamental view, broad brush view. And we'll be doing that hour looking at the big NASDAQ. See you in about an hour and 20.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawn charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.